After being in the trading business in nearly 12 years and training literally thousands of traders, we've learned a few things. We've seen repeatedly that traders fail because they don't understand how the markets really work, and they don't understand how to set up their trading business to be profitable from the start. In this video, I'm going to teach you exactly what you need to know to become profitable, and more important, I'm going to teach you what you need to know to stay profitable. Let's get into it. All right, so the first lesson that you need to know is this. It's called the 90-90-90 rule. And what this states is that 90% of traders will lose 90% of their account within 90 days. And the retail trading industry is built upon this statistic. It is rock solid. You can count on it happening. So the question is, how do you avoid being part of this 90%? And the answer to that is you need to do everything opposite of what these people do. First thing you need to do that will immediately improve your trading is stop using settings-based indicators. This means moving averages. This means your MACDs and anything else that can be adjusted. If it has a number that you can tweak to make it fit certain types of market condition, you need to get rid of it. Get it off your screen. Price action is king. Price action is what actually is happening. So you need to become awesome at price action. And the way that you're going to do that is by understanding that the market doesn't move in patterns. It moves in cycles. And these cycles are controlled by the bank's profit model. There is only one way to make money in trading, and that is by accumulating inventory and then distributing it for profit. So if you want to actually be consistent, you need to study this model and this model only. And this model can be totally seen and understood through price action alone. It goes as follows. The banks accumulate their inventory by making the market get into a tighter and tighter range. That's where they start. When they're done with that, they then manipulate the market to throw everybody off. They whipsaw everybody out. They're able to accumulate massive amounts of more inventory at that same time. And then they let the market go into the predictable outcome, which is the distribution phase. This is where they sell or buy back their inventory for profit. Then what do they do after that? You guessed it. They do it again. They start accumulating more inventory. They whipsaw everybody out, throw everybody off, and then distribute it into the rising trend phase of the market. This is the only thing you need to study. It's the only way to make money. The better you get at seeing these market phases, the better you're going to do. Now, this might be really eye-opening for you, this whole concept of accumulation distribution, especially if you're new to trading. I'm not going to spend a lot of time on this. What I can tell you is that the rest of my videos on my channel pretty much deal with this. So go watch those after we're done here. Let's go to the next one. Trade higher time frames. Now, I've worked with thousands of traders over the last 12 years, and I can tell you there is one huge thing that sticks out, and that is that most traders should not be trading lower time frames. In fact, the traders that insist on trading timeframes below the 15-minute chart for their entries and exits almost categorically have terrible results. And the reason is because trading low timeframes gives people decision fatigue. There's so much stuff coming at you so fast, it's very hard to keep up with what you should or shouldn't be doing. They also go into over trading. The decision fatigue gets them tired. They lose money so quick, and then they feel the need to get it back. There's just so many pitfalls that this leads to. Another thing is that high risk exposure. They're typically trying to trade short term so that they could lot up and really maximize every opportunity. And that also leads to problems. They're trading too big and they shouldn't be doing that. And that also leads to low profits and big losses. Typically, traders that are trading low timeframes will see a 5 or a 10 pip move and book it real quick. But then when they're wrong, they'll take 20, 30, 40 pip hits, especially when the higher timeframes start committing to the market and moving it at scale. So lower timeframes are usually a bad idea for most people. Here's the golden rule to selecting the very best timeframes for you specifically to be using to trade. It goes as follows. On your entry time frame, you want to use a time frame that you can look at least once per bar. This means if you're trading a 5-minute chart, you need to be able to look at and analyze what's going on a minimum of at least once per 5 minutes. If you're trading a 15-minute chart, it would be once every 15 minutes. Now, what we found is that most people that are trying to learn how to trade have other jobs. They have other priorities and things they need to take care of. So they are not able to effectively monitor their entry timeframes, yet they insist on trading low timeframes. So in most cases, if that's your situation, it would severely benefit you to move up to higher timeframes that you can effectively monitor. In most cases, this is going to be 4-hour, daily, and above. If you do this, you will immediately improve your results. Now, it's super trendy right now to be trading and making money on your phone. Who wouldn't want to do that? So I've developed a awesome hack that's going to show you exactly how you need to trade on your phone for the best results. So it goes as follows. First, you want to go out and you need to buy the most expensive iPhone that's out there. Do not skimp on price. Then you need to download the MetaTrader app. Okay, so with me? All right, when you download the MetaTrader app, you then need to connect your brokerage account. Okay, so you could get ready to trade. Then when you see your setup come across that phone, what I want you to do is I want you to take your phone, I want you to throw it straight at the ground, smash it, step on it, and never trade on your phone ever, because trading on your phone is stupid. You will get out way cheaper by destroying a brand new iPhone than all the losses that you're going to take trying to trade on your phone. Be a professional. Trade from a proper setup where you can be present and make the decisions you need to make. Now, the only caveat to this, though, is that if you're trading much longer time frames, like the 4-hour daily, it is okay to occasionally check your positions. But when you're making the decisions to get in and out of the trade and looking at your setups, make sure you're using a proper setup. It doesn't have to be a million screens. A laptop and a quiet room will do just fine. Just remember, be a professional. Don't trade on your phone like an idiot. Trade smaller to build quicker. Now, most retail traders trade way too big of position sizes according to their account size because they're desperate to make money. They think if they trade big, it's going to go faster. This inevitably causes them to lose account after account. And this could go on for 5, 10, 15. I've seen people doing this for 20 years. So here's the antidote, something I'm going to teach you in about the next 30 seconds so you don't have to fall victim to this anymore. Starts right here. Understand that the market is going from a small to medium to large size range 2/3 of the time. That's because out of the 3 market phases, only the 3rd phase is the trend traveling phase. That means the rest of the time it's going sideways. So understand that that's happening most of the time. Then combine it with this, your pain and pleasure response, which is basically my twist to fear and greed control the market. I don't believe that. I believe pain and pleasure are what control the market and your outcomes. Let me explain. So if you buy the market anywhere really, but in our example, we show you buying the market right here. If you plot that level forward, above that level, you will feel pleasure. You will feel good because your position will be profitable. Below that threshold, you will feel pain. So if you trade too big of a position size, this pain will be too intense and it will cause you to want to close out, because with pain and pleasure, what do humans do? When they feel good about something, they never want it to end. This is why you'll see huge gains and never take them, is because you think it's going to keep on going, and who wouldn't want that to stop? But then when it goes against you, what do? You're like, ooh, I'm losing money, I'm out. So you take decisive action in pain and you become lackadaisical in pleasure. And this, in a nutshell, is why traders lose money. So if you combine this and this, how do we fix this? And the answer is trading smaller positions. If you trade smaller positions, this will increase your time in market. Ask Warren Buffett how he makes money. It's not timing the market necessarily. It's time in the market. So by understanding a little bit about technical analysis and the market cycles, we trade smaller positions, which will buy us to more time in the market. We'll be able to bake in those positions. And chances are most all those positions will put you into the money. It's just a matter of time. So if you do those two things, that will equal more wins. Now we cover probably the biggest success hack of them all, which is using other people's money. Let's think about it for a second. Who makes the money in this business? It's the banks and the hedge funds. How do they do this? They do it through proprietary trading. What money are they trading? Other people's money. This is why they raise money in the first place. But why would they want to do this? They want to do it because of profit and longevity, which is their selfish incentives. And not that selfish if you want to be in business a long time. They want to make the most amount of profit and bonuses that they can over the longest period of time that they can. So how would you do this? Would you rather have a fund that has $5,000 in it that you're desperately trying to make a living from? Or would you rather have a fund that has $5 billion in it? They would rather have a fund that has $5 billion, because the bigger pile of money that they have to make a return on, the less risk they need to take, which ensures that they get their personal profits, their bonuses, their salaries, and they get to do it for a really long time. So how can you copy this same model being a retail trader? The way that you can raise money just like the banks do, lower your risk and amplify your profits, is through prop firm trading. Probably the best thing to hit the retail trading space in a long time. So prop firm trading allows traders to be able to get funded with $25K to $500,000 of other people's money. Now, there's a number of different programs out there, but I'm going to talk about the one that we use specifically, which is our partnership through Prop Account LLC, one of the biggest prop firms in the world. So we have 25K to 500K accounts. The basic rules are you have to hit a 10% profit target without hitting a 6% max drawdown on the account. If you do this, you can get funded with between $25,000 and $500,000 of other people's money. Now, trading $500,000 account is going to allow most people to make a much more significant amount of money that they would be able to relative to trading a $5,000 or a $1,000 account that they're scared to lose. 1% of $500,000 is $5,000. That's a great gain for a day or even a month, whereas 1% of $1,000 is $10. You do the math. Would you rather be trading a big pile of money or a tiny pile of money that you're scared to lose? This is the ultimate hack right now to helping retail traders succeed long-term if these resources are used properly. Because using other people's money is so important for traders, especially if you don't have a big pile of money to trade on your own, I want to quickly talk to you about a really cool program that we offer ATS members. Not saying you have to use it, just want to let you know it's there. So for ATS members, we have what's called our Kickstart Challenge, and this is a no evaluation cost funding path, as you can see here. So basically, ATS subscribers can secure their first $25,000 real prop trading account at zero cost. And the way this works is that we give our members, anytime they ask, within 15 days, you have to wait 15 days apart, but they'll ask for a demo $25,000 prop evaluation. If they pass that prop evaluation within the rules of the firm, plus a few added rules, which are they need to have a minimum of 15 active trading days, and they need to show consistency in their lot sizing. If they do those two things on top of hit the 10% profit target and they don't hit the 6% max drawdown, we will purchase them at no cost to them a real $25,000 evaluation. If they then pass that evaluation under the standard rules, then they get their first 25K account. And we have no limit to how many times our members can do this. So as long as they have an active membership, they're part of our community, they can continually request demo evaluations until they pass and get their first $25,000 real account. We've implemented this because, again, it's so important that traders are able to leverage other people's money so that they can build those assets under management and decrease their risk. This is what gives them longevity in this trading game. So just want to tell you about this awesome program. So that's it. As a retail trader, if you adopt the things I spoke about in this video into your own trading, you will be immediately much better off than most every other retail trader. They are never going to stop chasing Holy Grail systems. They're never going to really truly understand price action. They're always going to be trading on scared money that they can't afford to lose. By doing everything opposite of them and copying what the banks do, the way that they make money in the market, the way they use other people's money, you do everything that way, then you will reap the same benefits not only now, but long term. If you like this video, remember to like, subscribe, share this with another trader you know that needs to hear this information, and also check out our other videos, because pretty much everything that I talk about is going to be in and around this type of information. How the banks trade, accumulation, distribution, all the things that really matter when it comes to trading. Until our next video, we'll catch you later.